Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of March 4th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, last week we saw mortgage rates in Maryland improve slightly. As you can look on the bond chart on the screen, you can see that on Monday we had a huge rally in the bond market, the big green candlestick up. That was because the stock market sold off. That pullback we've been looking for, we got a slight pullback in the stock market last Monday, gave us a big rally in the bond market, and then we improved on that slightly throughout the week, as you can see the arrow going up. Now, with that being said, if you look on the screen, you can see that the 200-day moving average has been capping us from moving above it. So we're going to recommend locking your Maryland mortgage rate to lock in these gains, have the rates move lower, because the risk is that we bounce off that 200-day moving average, bonds move lower, interest rates resume moving higher. So we are going to recommend locking in the short term. Now, if bonds are able to break above that ceiling of resistance to 200-day moving average, that means rates could start to improve again. But the risk right now is for mortgage rates to increase. We're going to recommend locking. Last week, the big news was the sequester. What that is the automatic spending cuts of $85 billion that took effect March 1st at midnight because Congress was not able to hammer out a deal. Those are cuts across the board to different programs, social program spending. There are some exemptions to like Social Security and Medicare, so those are not getting cut. And there's been some scare tactics by Congress to get something done. They've been telling the media that some big things are going to happen if the sequester goes through. And it's just not true. There's, like, for example, Maxine Waters stated that 170 million jobs will be lost if the sequester goes through. That's utterly ridiculous. There's only 150 million jobs in the United States anyway. So that if what she's saying is true, that means everyone that has a job is not going to have a job next week. And 40 million jobs don't even exist will be gone as well. Just ridiculous numbers. Not going to happen. Most people are going to go about their daily lives not seeing a huge impact from the sequester. The fact is the United States spends more money than it brings in revenue. We have to do spending cuts across the board. The argument now is just which ones are we going to cut. That choice has been made because Congress failed to act. So we're going to see how it goes. Last week we also saw Ben Bernanke testify before Congress, and what he said was definitely bond-friendly. He said that the Federal Reserve will keep the bond buying program to keep interest rates low until unemployment comes down, which will mean basically throughout 2013 they're going to keep buying bonds. And then the second thing he said was the Federal Reserve does not have to sell any of the bonds on their balance sheet. They can hold everything they've bought and will buy till maturity. That is great news because bond investors have been afraid that the Fed start dumping the mortgage bonds and the treasuries. It'll flood the market, drive prices down, and interest rates up. Federal Reserve, Ben Bernanke said we don't have to do that. We saw the reading on the fourth quarter for the GDP for 2012 came out very disappointing at 0.1%. If you look at the chart on the screen, you can see 2009, 2010, 2011, the fourth quarters were great. 2012, very disappointing at 0.1%. We need the economy growing to get to recover, so hopefully first quarter of 2013 comes out better. We did have some good news on the housing front. Case-Shiller 20 City Home Index showed that home prices improved year-over-year by 6.8%. and from November to December by 0.2%. We also saw new home sales for January very strong, and consumer confidence for February improved slightly. So all good news. And then we also saw initial jobless claims last Thursday come out better than expected at 20,000 less at 344,000 versus the expected of 360. So definitely some good news in the economy and some bad news tempered in as well. In the local news, the next free first-time homebuyer seminar in Maryland is in Towson, Maryland on Saturday, March 23rd from 10 a.m. to noon. You can register for that event by giving us a call in the office at 410-412-3319. Or you can register online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.